Disclaimer: this video explores the impact of real estate investors on the housing market, drawing insights from various credible sources. Our use of this material falls under the fair use doctrine for educational purposes. This content is for informational purposes only and should not be taken as financial or legal advice. Please respect the privacy of individuals mentioned.
Welcome to another deep dive, and this time we're going to tackle something that's been making headlines left and right, the crazy world of real estate, and specifically how investors are shaking things up.
Oh, it's definitely been wild out there.
Yeah, I mean, you see those stories about investors buying up everything in sight. We really wanted to dig deeper and understand the trends, so we've been poring over all sorts of research and analysis from places like Redfin, the Norris Group, Money Magazine, and even some legal and economic journals.
You know, I think people are going to be surprised by some of what we found.
I think so too. So to kick things off, let's talk about the elephant in the room, this surge in investor home buying we've seen in recent years. Redfin's data shows it really peaked around 2021. What do you think was driving that?
Well, you can't ignore the low interest rates, at least initially, right? That made financing super attractive.
Yeah, borrowing money was basically free.
Right, plus home prices were climbing and rental demand was through the roof, so investors saw dollar signs. You buy a property, lease it out, and boom, you've got a pretty sweet return on your investment. But there's more to it than just the numbers, I think.
Oh, really? What else is going on?
Well, think about it from the seller's perspective. They're often emotionally attached to their homes, you know? It's not just a piece of property to them.
Makes sense.
So when an investor swoops in with a cash offer, it feels like a sure thing. It's fast, it's clean, it's less risky. That kind of certainty can be really appealing even if someone else offers a bit more money but needs financing. There's just a sense of security that comes with a cash offer.
Yeah, that makes a lot of sense. And actually, Redfin found that a whopping 75% of investor purchases in late 2021 were cash offers.
Exactly. So when you're a regular home buyer trying to compete with that, it's an uphill battle.
No kidding. I read a story in Money Magazine about podcast host Nikki Hines. She lost her dream home to an investor who came in with an all-cash offer, even though she offered $15,000 above the asking price.
Oh, that's tough.
Yeah, it just goes to show you how this trend has really made it harder for regular folks, especially first-time buyers, to get their foot in the door. It's almost like trying to play Monopoly against someone who's using house rules.
That's a great analogy. And it wasn't just those massive investment firms either, you know, the ones with deep pockets. We saw a lot of smaller investors, what you might call mom and pop investors, getting in on the action too.
So it was almost like real estate became this really accessible investment for anyone with a bit of capital.
Precisely. But now things are starting to change. As we move into 2023, the landscape is looking a bit different. Rising interest rates have definitely cooled things down, especially for those institutional investors who rely heavily on financing.
So financing isn't as appealing when rates are higher. What are investors doing to adapt? Are they just sitting on the sidelines waiting for things to change?
Not necessarily. Some are still making big moves, like Invitation Homes. They're still acquiring properties. Others, like MetLife and JP Morgan, are getting creative and pivoting to something called build-to-rent strategies.
Build-to-rent. I haven't heard that term before. What does that involve?
Basically, they're saying, okay, if we can't buy existing homes easily, let's just build new ones specifically designed for the rental market. It's a long-term play, but they're betting on the continued strong demand for rentals.
Makes sense. So they're adapting, finding new ways to play the game. You know, Redfin's research showed a lot of investor activity concentrated in certain parts of the country, particularly Sunbelt cities like Atlanta, Charlotte, and Jacksonville. Why do you think those areas were so popular?
A few reasons, I think. Those cities were relatively affordable, especially compared to places like California.
Yeah, you can get a lot more bang for your buck in those areas.
Right. Plus, they were seeing huge population growth. People were moving there in droves, and that meant rising home values and strong rental demand, the perfect recipe for investors seeking good returns.
So it's a win-win for investors. But what about the people who actually want to live in those cities, not just rent? This influx of investors must be impacting their ability to buy a home.
It's a critical question, and it leads us to some of the ethical concerns surrounding investor practices. I mean, it's one thing to seek profit, but it's another when their actions potentially harm individuals and communities. And unfortunately, there have been instances where those practices have crossed the line.
Yeah, there are definitely some shady things going on.
Right. A ProPublica investigation uncovered some disturbing practices, particularly among some franchises of "We buy ugly houses."
We buy ugly houses. They're everywhere. I see there's signs all over the place.
Exactly. And what ProPublica found was that some of these franchises were using deceptive tactics, targeting homeowners who were in vulnerable situations, maybe facing foreclosure, or dealing with a property that needed a lot of work.
So they were preying on people who might not have the resources or the knowledge to fight back.
Exactly. And one tactic they highlighted was title clouding.
Title clouding. That sounds ominous. What is that?
Imagine someone putting a lien on your car title without your permission, just to force you to sell your car quickly. It's basically like that, but with your home.
So they're basically creating a legal problem that makes it hard for you to sell your home to anyone else but them.
Exactly. These companies would file documents against a homeowner's property title without their knowledge or consent. It's designed to pressure them into selling quickly, often below market value.
It's terrible. It sounds like they're taking advantage of people who might not understand the complexities of real estate law or are just desperate to get out of a difficult situation.
It really highlights the need for better regulations to protect homeowners from these predatory practices.
Definitely. We need more transparency in the industry and stricter licensing requirements for those operating in this space. It's great that ProPublica shed light on this issue. Hopefully, it leads to some meaningful change.
I agree. And thankfully, HomeVestors, the parent company of We Buy Ugly Houses, has banned title clouding among its franchises. But it makes you wonder how widespread these kinds of practices are. It's a good reminder to always be cautious and seek professional advice if you're considering selling your home, especially if someone's pushing for a quick sale.
Absolutely. But this whole discussion about investor practices and ethical concerns makes me think about the bigger picture, the larger economic trends that are driving all of this. It feels like the Great Recession might have played a role.
Oh, without a doubt, the Great Recession had a profound impact on the housing market, and its effects are still being felt today. It really set the stage for a lot of the investor activity we're seeing.
I remember reading an Investopedia article about it. The recession triggered a wave of foreclosures and defaults, right? Which caused home values to plummet.
Exactly, and that created a huge opportunity for investors. They had the capital to buy up those properties at bargain prices, often for pennies on the dollar. And that, in turn, helped fuel the rise of investor activity that we're talking about.
Right. It's all connected. And then on top of that, the lending landscape changed dramatically. Lenders became a lot more cautious, making it harder for people, especially those with less than perfect credit or smaller down payments, to qualify for a mortgage.
Exactly. It became a much tighter market for borrowers. And this is where the work of the Norris Group becomes really relevant. They've done extensive analysis of the California housing market, and their insights are particularly illuminating when we consider the impact of the recession.
They've talked a lot about how California's already limited housing supply, coupled with its extremely high demand, created this perfect storm of affordability issues.
It was a domino effect. The recession led to tighter lending, which restricted access to homeownership for some and created more opportunities for investors. And in places like California, where housing was already expensive, those trends just fueled the fire.
So we have this complex web of factors at play: the recession, the rise of investors, tighter lending practices, and these regional variations in housing markets. It's a lot to unpack. But I'm curious, what does all of this actually mean for someone who's just trying to buy a home?
That's the million-dollar question, isn't it? While there's no magic solution, there are some things you can do to improve your chances of success in a market where investors are active.
Okay, let's talk strategy. What did we find in our research that could help buyers navigate this challenging landscape?
Well, getting pre-approved for a mortgage is super important, and I mean with a reputable lender. It shows sellers you're serious and ready to go. It gives them that confidence that you can actually close the deal, which can be a big deal in a competitive market.
So it's all about showing them you're not messing around.
Right. And the Money article we read really emphasized that as a crucial first step.
Got it. So pre-approval is key. What else can someone do to stand out for the crowd, especially when going up against those investor offers?
Be prepared to make quick decisions. Investors often move fast, so you've got to be ready to act decisively when you find a property you like. That might mean being a little flexible with your closing timeline, or maybe even waiving certain contingencies if you're comfortable with the risk, of course.
Yeah, I can see how that can be a tough call, though. You want to move quickly, but also make sure you're not getting into something you'll regret later.
Absolutely. It's all about finding that balance between being decisive and doing your due diligence. But sometimes, it's not just about the numbers. A personal touch can make a real difference.
Oh, that's interesting. Tell me more about that.
Think about writing a letter to the seller, a genuine one.
Hmm.
Sharing your interest in the property, telling them a bit about yourself, why you love their home. It can really humanize your offer, especially when they're weighing multiple bids. Sometimes a heartfelt story resonates more than just a number on a piece of paper.
It's like you're reminding them there's an actual person with hopes and dreams behind that offer. It's not just a business transaction. I like that.
Exactly, but let's be realistic. Those tactics are great, but they don't completely level the playing field when investors often have more buying power.
Right. It's tough to compete with that.
It is, and that's where we're starting to see some innovative solutions emerge. For example, there are now companies offering what they call cash offer programs for individual buyers.
Cash offer programs. How does that even work? I thought you needed, well, cash to make a cash offer.
You do, but these companies essentially front the cash for the buyer, allowing them to make an all-cash offer on a home. Then, once the sale closes, the buyer secures a traditional mortgage to repay the company.
Wow. That's pretty amazing. It's like they're giving regular buyers a secret weapon to compete against those investor cash offers.
It's definitely a promising development, though it's still relatively new. It'll be interesting to see how it evolves. But, we've been talking a lot about what individual buyers can do, but what about the bigger picture? Are there any policy changes that could help address this imbalance between investors and regular home buyers?
Yeah, it feels like we need some systemic solutions, not just individual strategies. It's great to empower buyers, but we need to address the root causes of this issue as well.
Absolutely. And one idea that's gaining traction is implementing policies that prioritize individual home buyers, especially in those super competitive markets.
What could that look like in practice? Any specific examples?
Well, some cities are experimenting with programs that give local residents a first look at buying homes before they're open to investors.
Oh, interesting. So it's like giving locals a head start.
Right. It helps ensure that people who want to actually live and work in a community have a fair shot at owning a home there. It's about prioritizing community stability and preventing longtime residents from being priced out of their neighborhoods.
Makes sense. It's about keeping communities together. Are there other policy ideas out there?
Definitely. Another idea is to create financial assistance programs specifically for individuals designed to help them compete with those investor offers.
Now we're talking. Tell me more about that.
Think things like down payment assistance, closing cost grants, or even tax breaks for first-time homebuyers. It's all about bridging the gap between what regular folks can afford and those often inflated prices driven by investor competition.
I love that. It recognizes that home ownership is more than just a financial transaction. It's about building wealth, stability, and community. But we've also talked about the role of technology in all this. Could tech be part of the solution too?
Absolutely. Technology has already transformed how we approach real estate. Think about platforms like Zillow and Redfin. They've put so much information at our fingertips, and that innovation is only going to continue.
It's amazing how much you can do online now, from browsing listings to getting pre-approved for a mortgage. It's also streamlined. But where do you see things going from here? What other innovations are on the horizon?
We're seeing the rise of platforms that connect buyers and sellers directly, cutting out the traditional real estate agent and potentially reducing costs. Of course, agents still play a vital role for those who need guidance and expertise. But for those comfortable navigating the market on their own, these tech-driven solutions are a game changer.
It's all about having options. Buyers and sellers should have the power to choose the approach that works best for them. But technology could also help bring more transparency to investor activity.
Couldn't agree more. Imagine a publicly accessible database that tracks investor purchases, showing their strategies, the areas they're targeting, their impact on local markets. That would be incredibly valuable for individuals, policymakers, and researchers.
Transparency is key. It empowers everyone to make more informed decisions. But amidst all this talk about the challenges investors pose, it's important to remember that real estate investing isn't inherently a bad thing.
Oh, absolutely. It can be a powerful force for good. It can revitalize neglected neighborhoods, create much-needed rental housing options, and contribute to economic growth. It's all about balance, making sure that investment is done responsibly and ethically.
It's about finding that sweet spot where investment benefits everyone, not just a select few. So with all of this information swirling around, what are the key takeaways you want our listeners to remember from this deep dive?
Well, first and foremost, knowledge is power, right? Whether you're thinking about buying a home, selling one, or just trying to understand what's happening in your neighborhood, the more you know, the better. So stay informed, keep up with local market trends, Research different investment strategies and make sure you understand the potential risks and rewards involved.
And don't be afraid to ask for help along the way.
Oh, absolutely. A good real estate agent or a trusted attorney can be invaluable. There are resources out there to guide you through every step of the process. But let's shift gears for a second. We've talked a lot about buyers, but what about homeowners who might be considering selling their property? What advice do we have for them, especially with all these investors circling?
That's a great point. We've talked about some of those shady tactics investors might use, so what are some red flags homeowners should be on the lookout for?
The biggest one is being pressured to make a quick decision. If a buyer, especially an investor, is pushing for an immediate sale, making promises that sound too good to be true, that's a sign to proceed with caution. Take your time, carefully review any offers or contracts, and don't be afraid to walk away if something feels off.
It's your home, your equity, your decision. Don't let anyone rush you into something you're not comfortable with.
Exactly. And speaking of things that feel off, remember we talked about title clouding?
Oh yeah, that sneaky tactic where someone files a document against your property title without your consent.
Right. Homeowners need to be aware of that. It's a way to pressure you into a sale, and it can be a real nightmare to deal with.
So what can homeowners do to protect themselves from that kind of thing?
Being proactive is key. Check your property's title records regularly to make sure everything's in order. And if you suspect something fishy is going on, like your title might be clouded, contact a real estate attorney right away.
It's better to be safe than sorry.
Absolutely. And just like buyers should do their research, sellers need to arm themselves with information too.
So what kind of information are we talking about?
Understand your local market. What have similar homes in your area sold for recently? Don't just rely on what a potential buyer tells you about your home's worth, especially if they're an investor. Consider getting a professional appraisal for an accurate assessment.
Great advice. So it seems like whether you're buying or selling, the key is to be informed, proactive, and assertive. Ask questions, seek professional advice when you need it, and most importantly, trust your gut.
Couldn't have said it better myself. And remember, there are resources out there to help. Organizations like AARP and the National Consumer Law Center have great information for homeowners. And a trusted real estate attorney can provide peace of mind throughout the process.
This deep dive has been a whirlwind, that's for sure. We've covered so much ground, from investor trends to ethical considerations to practical tips for both buyers and sellers. I feel like I've gained a whole new perspective, and I hope our listeners have too.
It's been a pleasure unpacking all of this with you, and I hope we've sparked some great conversations out there. The world of real estate is always changing, so it's crucial to stay curious and informed.
After all, the more we understand about how the housing market works, the better decisions we can make, and the more likely we are to achieve our goals, whether that's finding our dream home, making a smart investment, or just creating thriving and inclusive communities.
And on that note, it's time to wrap up this deep dive. Thanks for joining us. We wish you all the best in your real estate journeys.
Until next time, happy house hunting, everyone. You've sent over a really interesting collection of articles all about real estate investors and their impact on the housing market.
Right.
We've got these analyses and news reports and even some opinion pieces.
Yeah, real mix.
It's a very diverse set of sources.
It is.
It seems like you're really trying to get a grasp on this whole trend of investors buying up homes, especially those more affordable ones.
Yes.
So is this narrative of them being the quote-unquote villains of the market accurate, or is there more to the story?
Well, I think these articles give us a really good starting point to explore that very question.
Okay.
They really showcase real stories, real people navigating the actual effects of this whole thing.
Yeah, it's not just some abstract economic theory.
Exactly.
It's impacting people's lives.
Right.
All right, so let's jump into these sources and uncover what's really going on. We'll look at who these investors are, what they're doing, where they're doing it, and most importantly, what it all means for you.
Sounds good. I think to start, it's really important to just kind of set the stage right.
Okay.
Like, how big of a presence do investors actually have in today's market?
Yeah, that Redfin analysis was pretty startling.
Oh, yeah.
They said that in the first quarter of 2024, investors bought almost 1 in 5 homes sold in the U.S.
Yeah, that's a huge chunk of the market.
It is a significant portion.
Absolutely.
And this isn't just some, pandemic blip.
Right.
It's an increase from last year, and it's the first increase we've seen since 2022.
It's a trend that's been going on for a while.
Right. And the CoreLogic data shows that since 2021, investors have consistently made up about a quarter of all single-family home purchases.
It's a consistent pattern.
So this kind of highlights this ongoing quote-unquote financialization of housing.
Right.
Which I guess refers to this idea that housing is increasingly being seen as an investment asset rather than just a place to live.
Exactly. It's becoming more about profit than providing homes for people.
So instead of just a place to call home, we're treating housing like stocks or bonds.
Pretty much, yeah.
Okay.
But here's the thing, though. The landscape of these investors, it's not so simple.
How so?
Well, we often hear about these Wall Street giants, right? Gobbling up properties.
Right.
But it seems like smaller investors,
Okay.
they still play a really big role.
I did notice in the CoreLogic data that they separate out investors based on how many properties they own.
Exactly. And so while we see these so-called mega investors,
Okay.
those with 1,000 or more homes,
Wow.
like Blackstone, for example, they've actually scaled back their activity
Really?
in the third quarter of 2023 compared to the previous 2 years.
So Blackstone, one of the world's largest landlords, is slowing down.
It seems that way, yeah.
I wonder what's behind that.
Well, it could be a lot of things, right?
Okay.
Maybe rising interest rates are making it more expensive for them to finance these huge deals.
That makes sense.
Or maybe they're just reassessing their strategies given all the, market volatility lately and the concerns about a potential economic slowdown.
Right. So it sounds like while we shouldn't ignore those massive corporate entities, we also have to remember that individual investors buying just a handful of properties are still major players in this whole thing.
Absolutely.
And I imagine these different types of investors might have different motivations
Oh,
and
definitely.
use different strategies. It's not just about scale. It's about whether they're flipping houses or holding onto them as long-term rentals.
Right. And that's where it gets really interesting because those different approaches can really impact the market in distinct ways.
Right. And that's what we need to unpack.
Exactly. I think to really understand their impact, we need to dig into what motivates them
Okay.
and what strategies are they using.
Right.
And what's interesting is that for a lot of these investors, the approach is pretty simple.
Well, both the Redfin and the Realtor.com articles pointed out that investors are really drawn to those more affordable homes.
Makes sense, right?
Yeah, they cost less, and they have the potential for value appreciation, especially in a market like this.
Exactly. But it goes beyond just buying low and hoping the price goes up.
Okay.
Increasingly, investors are buying these homes to rent them out.
Oh, so they're looking for that steady cash flow.
Exactly. That's what the Realtor.com and CoreLogic reports were suggesting.
And there was that really interesting anecdote in the Redfin article
Oh, yeah?
about that real estate agent in Riverside, California. They said they're just getting bombarded with emails from investors looking for, below market value properties,
Wow.
especially foreclosures.
Yeah, that really paints a picture, doesn't it?
It does.
It shows how actively they're pursuing these properties, specifically targeting those they can get at a discount.
So we've got investors, both big and small, buying up properties,
Right.
particularly those more affordable ones, and often turning them into rentals. This raises a big question, though.
What's that?
How does all this activity actually affect the overall housing market?
That brings us to one of the most debated issues right now, the impact of investors on affordability and the housing shortage.
And our sources definitely reflect that debate.
For sure.
There's no clear consensus.
Yeah, some argue that investors are driving up prices, squeezing out first-time buyers, and making the housing shortage even worse.
That was definitely the perspective in the Jacobin article,
Uh-huh.
the Fox Business piece, and the bank rate analysis.
Right, but then you've got sources like the Miami Herald
Mm-hmm.
and even Redfin's own research suggesting that investors' influence might not be that big of a deal.
Yeah, Redfin actually did a study, and they found no evidence that single-family REITs,
Which are,
real estate investment trusts,
right, companies that own and operate income-producing real estate.
right, that those REITs are crowding out buyers or driving up prices.
Interesting.
So how do we make sense of these totally conflicting viewpoints?
Well, I think it's important to remember that the housing market is super complex. There are so many factors at play.
Right.
So saying that investors alone are responsible for rising prices or shortages, that's probably an oversimplification.
Okay. So maybe it's not that simple.
Right, but even if their impact on prices is debatable, we can't ignore the fact that they're buying up a significant chunk of available homes.
And especially those entry-level homes that are already in short supply.
Exactly. So even if they're not single-handedly driving up prices, their involvement still has consequences.
Right. And that limited supply has a direct impact on affordability, especially for people trying to buy their first home.
Absolutely.
And the bank rate report found that 42%
Wow.
of aspiring homeowners can't afford a down payment.
That's a huge number of people.
It is.
And it really ties back to this advantage that investors often have in the market.
How so?
Well, as both the Fox Business and the Bankrate articles pointed out, investors often pay in cash,
Right.
which makes them way more appealing to sellers.
It's like this vicious cycle. Fewer people can buy, so the rental market gets squeezed, leading to higher rents, which makes it even harder to save for a down payment.
It's tough, especially for those already struggling with affordability.
Right, and then when we look at where this investor activity is concentrated, the picture gets even more stark.
Where are we seeing the most activity?
Well, Florida and California seem to be the main targets.
That's what Redfin and Bankrate both highlighted.
And Redfin actually listed the top metro areas with the highest share of investor purchases.
And where was at the top?
Miami came in at number 1
Wow.
with a whopping 30.6%.
So almost 1 out of every 3 homes in Miami is going to an investor.
That's a lot.
It is.
But it's not just the coasts.
Oh, really?
Realtor.com said that investors are also looking at the Midwest and Southeast.
Interesting. What's drawing them there?
Well, they're attracted by the affordability and the steady rent growth.
Makes sense. They're casting a wide net, looking for opportunities wherever they can find them.
And with this growing presence, it's no surprise that policymakers are starting to pay attention.
So what are they doing about it?
Well, the Jacobin article talked about some of the potential solutions that are being proposed.
Like what?
One example is Senator Merkley's bill
Okay.
that aims to limit corporate ownership of single-family homes.
That's a pretty bold proposal.
It is, but the article also pointed out that it's facing some serious pushback
Oh, really? From who?
from the single-family rental lobby.
Yeah.
They represent those companies, that own and rent out single-family homes.
Right.
And they've really ramped up their lobbying efforts in Washington
To do what?
to try and block any attempts to restrict their operations.
So it sounds like they're trying to protect their interests.
Exactly.
It's interesting how the Jacobin article kind of highlights the challenges of taking on this really powerful and well-funded industry.
It speaks to this broader issue of how concentrated wealth and power can influence policy decisions.
It's a big issue for sure.
It is. But even if federal legislation is stalled, are there other options?
Well, the Jacobin article did mention that some states are exploring alternative solutions.
Oh, like what?
Things like putting caps on the number of homes that investors can own.
So kind of limiting how much of the market they can control.
Exactly.
Okay, so there are some efforts to push back against this trend.
There are.
But there are definitely obstacles.
For sure.
And the Jacobin article brought up another really important point about transparency.
Right.
They said it's often really hard to even figure out who actually owns these properties.
It's true. Investors often use shell companies to hide their identities.
So that makes it harder to track their impact and hold them accountable.
Exactly. It creates this kind of lack of transparency and makes it difficult to fully grasp, the extent of their influence and the long-term effects.
So it's like we're dealing with this black box.
Kind of.
We know they're buying up homes, but the full scope of their influence and those long-term effects remain a bit of a mystery.
That's a good way to put it. And I think it highlights the need to move beyond just demonizing investors.
Okay.
And instead really focus on understanding the bigger picture, the systemic factors that are at play.
So looking at the whole system, not just one piece of it.
Exactly. The goal should be to create a housing market that's more equitable and accessible for everyone.
Right. A market that works for everyone, not just investors.
Exactly.
So as we wrap up this deep dive, what can we say about the role of investors in today's housing market?
Well, it's definitely complicated.
It is.
There are no easy answers, but some people see investors as the bad guys driving up prices, while others argue that they're just responding to the market.
And both sides have valid points.
They do.
But what's clear is that they're having a real impact,
They are.
especially for those folks who are trying to buy their first home.
That's where the impact is most felt.
Right. It's making an already challenging situation even tougher.
It is, but I think it's important to remember that we don't have to just sit back and react to what investors are doing.
What do you mean?
We can be proactive. We can push for solutions that promote affordability and access.
So instead of just focusing on limiting investors,
Right?
we should be looking at ways to empower individuals.
Exactly. Things like down payment assistance programs, community land trusts, or even co-ownership models.
So giving people more options and more support.
Exactly. It's about leveling the playing field and making sure that everyone has a shot at earning a home.
It's a great point to end on, and something for our listeners to really think about as they navigate this ever-evolving housing market.
Absolutely. Everyone deserves a place to call home, and we need to make sure that the system works for everyone.